Hello and welcome back to the channel. So the market is doing absolutely awful. Uh, just earlier in the week, the market expected for inflation to slow down, but that's not the case. That's not what happened.
You were asked if you were bored with your bedroom life. You said no. The lie detector determined that's a lie.
And as a result of that, the market went down. And then today, this morning, FedEx said that their full year guidance looks very bad.
Well done! Well done!
So they essentially said that macroeconomic trends significantly worsened and the shares went down 20%. So they're saying that the global volumes declined, which means there's fewer goods being shipped internationally. So that's definitely a good look into what's really going on in the economy, not what we're being told on the news and by our leaders, but by what's actually happening in a real business setting. And FedEx is definitely a good look into the economy because, if nobody's sending any goods or there's less goods being sent, that's probably a sign of economic slowdown in general. And down 22%, the worst day in 40 years. So we're going to get into what I bought this week and the changes in my portfolio and just take a look at all the damage that's going on in the market. All right, let's roll the intro. And I just want to give a shout out to Paul. Thank you for using my referral link. And let's just see, I got $10 as a reward. So hopefully you got something good too. So feel free to use my link in the description below to get yourself the value of up to $3,000 when you use that link to sign up for WealthSimple Trade. So in the TFSA, we are down $173, down 1% today. Just this past week, we're down about 2%. And the past month, we're down about 7%, or down negative $1,274. Year, and then all time, we're down $531.79, or down minus 3%. And the past year, we're down about 6%. So the portfolio is definitely taking some hits, but there seems to be selling going off market wide. So Apple has recently unveiled their new iPhone 14, their new products, new Apple Watch, and it's just taking a hit just like every other stock in the market. We're still in the green on this one, so that one's holding all right. AQN, has been trading around the $17, $18 level, so that one, it's not really impressing me, but it's also not disappointing me either, compared to how some other stocks have been declining by a steady pace. And I bought one more share of ATD, going from 9 to 10, so that's been doing excellent. We're still up about 3%. It's a newer position for me, but very happy with this one so far. Aritzia is up 21%. So I bought a lot of this when it was in the mid $30 range. And just last week, Lululemon had a very, very strong earnings report. So it gave investors a lot of confidence into Aritzia because, it's in a similar industry, luxury, more expensive clothing. So the stock shot up. I still think this one's a little bit undervalued. I think for about a 13% return, according to my calculations. Of course, do your own research. Don't blindly follow any advice on the internet. When it comes to finances or investing, you can lose money. I believe you can get about a 13% return if you buy this at $50. If you buy it lower, then probably a little bit higher. So pretty happy with the performance of this one. Very, very new holding for me. And you can check out on the earnings of Lululemon in my previous video as to why Aritzia has been shooting up recently. And then in Brookfield Asset Management, I also bought another share going from 13 to 14. And this one has been declining. I actually want to pick up 2 more shares of this because Brookfield is actually going to be spinning off their asset management business into a separate company. They're still going to retain the rights of about 75% of the business. And the reason they're doing it is that it's going to be valued at a higher rate as an individual business as opposed to a conglomerate that owns many companies, where you don't get the full value, because it's very hard to value a company that holds 10 companies rather than just a company on its own. So for each 4 shares of Brookfield Asset Management you have, you're going to get 1 share of this spinoff. So I actually want to get this up to 16, just so it's an even, so I get 4 shares even. And Scotiabank, I've just been buying it fractionally, so the banks are being hit just across the board. Scotiabank has been taking a lot of hits, so I've just been putting, fractional shares into this. And then a new stock I've purchased is actually Costco. So I bought about $100 US of Costco. So I'm sure most of you are familiar with Costco, but if you're not, it's basically a membership warehouse business where the store is essentially just a warehouse. So they don't have a separate warehouse and retail store that they have to ship out from a warehouse. So that cuts down on cost. It makes it very efficient to send product to just a warehouse, and then the warehouse is just a store. So very easy on the management side and very efficient. And most of their revenue is actually derived from memberships and membership renewals. They have a renewal rate of about 90%. So you have to actually pay every year to shop at Costco. And that revenue is very consistent, very predictable. It's a very high quality source of revenue, similar to, what Microsoft or Apple do with their subscription-based services. So this is what sets this retailer apart from, like a Walmart or something else like that. And they have about 828 warehouses worldwide, with the majority being in the United States, some in Canada. But you can see that there's a lot of growth. This is an international company, and they can definitely continue to grow for a long time to come. And another reason why they're so loved and praised is that the customer service at the store is excellent. They pay their employees very well, very high wages relative to other retailers. So if you have happy employees working at your workplace, they're going to give better service to the customers, which in turn make the members happy. And it's kind of like a self-fulfilling prophecy, where if your employees and the customers are happy, you're going to have a good business. Where the customers are happy, they're going to renew, they're going to shop exclusively at Costco. And because they pay for a membership, they feel compelled to go to Costco and to make lots of purchases. Another thing Costco does very, very well is that they have very cheap chicken, barbecue chicken that they sell at a loss just to get you into the store. And you're definitely going to be walking out with a lot more product than you expected. You're going to go in for a chicken, you're going to walk out with about a $400 shopping cart before you know it, because you see a bunch of things that you weren't expecting, a lot of impulse purchases. And Costco also normally cycles different products from time to time, so it kind of creates the sense of urgency that, I may not see this next time I'm in the store, so I better buy it now. So that's another way that Costco just keeps you coming back into the store, because things keep changing, and it's always exciting, kind of like a treasure hunt, or like a garage sale sort of feeling, where you might find that next treasure or something you weren't expecting, and if you don't buy it now, you may not get the chance later. So that's another way that Costco increases their sales. And they also have a growing dividend. So their dividend growth has been incredible, and they even pay special dividends from time to time when they have a lot of cash on hand, and they give that back to the shareholders. So very shareholder-friendly company. And I only started a small position in it because I really just wanted to start the position. It has faced a little bit of a dip recently, and I think that I'm just going to start doing little buys into it. If it does drop a lot, that's going to be great. I'm definitely going to be looking forward to building a larger position in this great company. I realize I'm paying a high price for the company, but I think in the long term, if I hold it for 10, 20, 30 years, that premium is going to be insignificant to the return that this business is going to generate. Sometimes you just have to pay up for quality, and if you hold quality for a long enough time frame, you can make back whatever you overspent. To a degree. I don't think it's extremely overvalued. I think it's just slightly overvalued, which is fine for this one. So to sum it up, Costco just offers its members the lowest absolute prices on goods, And other businesses will have a tough time competing with that because it's so low margin, but the majority of their income actually comes from the memberships. So those low prices keep customers coming back and renewing, and very optimistic about this in the long term. If it finally dropped from like the 550 range to down to around 500, if it continues to fall into the 400s, I'll definitely buy this more aggressively. So I just started a small position because, it does have some downside in the short term, but I plan to hold this stock, long term, if not forever. This has many of the qualities that I look for in a high quality business: a growing dividend, solid, predictable business that is going to continue to grow going into the future. Like this stock is definitely, and this company is definitely going to be a winner long term. And DFN, I bought one more share going up to from 101 to 102. So we just used our dividend and continuing to buy this for free from the dividend that I get, a little over $10 a month, $10.20 a month now, and the shares only cost $7.42. So we're just continuing to increasing our income another 10 cents a month, just passively. And then ENS, we went from 64 to 70 shares, so I bought another 6 shares of this, going up to 70 because Enbridge dropped a bit, just like the rest of the market, and I think it's a great time to add more. I also want to get this to the point where it can just purchase itself every month, and I don't even need to think about it anymore. It's just going to continue compounding in the background. ETHY, so crypto still not doing well. I just bought one more share going from 56 to 57. Crypto is basically just following the stock market. So, if stocks are down, crypto's down. If crypto's down, stocks are down too. So it's just a good gauge of how risky people want to be, how risky investors want to be in the market. So right now, nobody wants to take any risk at all. Everybody's selling out of their securities. They're afraid that they're going to fall further, but we can take advantage of this fear and buy the dip in like good quality businesses that you're very confident in, or your long-term ETF that you plan to just buy and hold for 30 years, maybe longer, and just keep buying it. Don't think about it. And Google's actually dropped to pretty good levels, very attractive levels actually. So might be picking up more of this in a bit with future deposits. It's definitely a very attractive business. Owning YouTube, so definitely one for me to look into. And we also increased my holding in H yield. I believe we went from 115 to 120, so I recently reinvested the dividend right back into this one. So this is continuing to repurchase itself, and it's giving about a 13.4% yield at the moment. So really, really high income. So basically S&P 500, but the income version of that. Because I'm trying to grow a dividend portfolio and I have some stocks that don't pay dividends, and then I kind of want a little bit of higher income from some of the stocks to kind of offset that, lack of passive income or very low yield, like Costco, ATD, BAM, Microsoft, Apple. They don't pay a lot in the way of dividends, but you can expect a lot of growth in the companies in terms of the share price. That dividend will grow over time, obviously, but in the short term, not so great for that. And with Intel, we just bought 2 more shares. Semiconductor industry is absolutely destroyed. Aside from this, I think AMD is actually trading at a decent price. I think it's in the mid 70s right now. So if you're looking for semiconductors, I'd say Intel, AMD are my favorite at the moment. So this is just sector wide. My worst investment so far, but that's all right. I'm willing to continue buying this because I know that investors are more short-term focused, and that's why Wall Street is downgrading like all these semiconductor companies. And then with Microsoft, I bought one more share going up to 2.7. It dropped into the 250 range, so I bought one more share. I wanted to get the whole weighting up in my portfolio because I bought a ton of Apple. And now that Microsoft has dropped again, I'm going to take my chance to increase Microsoft. It's now about a 5% weighting in the portfolio. And Power Corp, I haven't bought any more. I should be doing a buy of this when they pay the dividend. I'm just going to pay the difference and kind of make my own drip where you get an extra share each time they pay a dividend. So I'll just pay the difference on this one. They pay me about $12, so I only have to put in like 22, get another share, grow the dividend for next time. And with Smart Centers, we went and bought about 4 shares. So we went up to 31 shares because the price on this went down. So definitely a great time to get more real estate in the portfolio, increase that monthly income. And about a little, and with Telus, it dropped. So I'm definitely looking forward to adding to this one soon. If it drops more, I'll definitely be looking to add more aggressively, but maybe 1 or 2 shares. Definitely going to be picking another one up when they pay me the dividend, just to continue my strategy of having my stocks being able to purchase themselves. And same thing with TD Bank, just went down just like all the other banks, but it's actually holding pretty strong. They have a lot of good acquisitions on the way, so they're going to do good in the long term. So not hit as bad as the other banks in the market, and definitely holding up better than Scotiabank in terms of just the share price, but also a good opportunity to add to my Canadian bank. So I might do that as well. And then Tesla's doing okay. I mean, it's not doing fantastic, but it's holding up a little better than some other companies like Adobe, which dropped like a lot in one day. And then just rounding out the portfolio, I also have an RRSP with about $622 in it. We're up 16% all time. I only have one stock, which is Starbucks. I have about 5 shares of it, and we're up a little 9%, 9.5%. But because of currency fluctuations and the fact that this is in US dollars and the Canadian dollar's underperforming so much, we're actually up 16% in the portfolio. Starbucks recently appointed a new CEO, and they said they're going to be reinitiating their stock buyback program, and they're going to be giving about $20 billion worth of value to shareholders over the next 3 years, which is great because, just a few months back, they said they were going to suspend the buybacks. But I think that was just to help with the unionization issue that they were facing and, trying to appease their employees. But now I think they're back on track, so the buybacks are back, and the market really responded. Starbucks went up about 6% in just a single day, going from the 80s over 90 now. And because they also affirmed better forward-looking guidance that their growth rate was going to be a little bit higher than anticipated over the next several years. So definitely great news for a Starbucks shareholder. I'm definitely very happy about that. The buybacks were one of the reasons why I bought the stock. I didn't sell it when they said they were going to stop it. So it was basically only a few months, and it created a little bit of a discount, and because there's a little bit of uncertainty around Starbucks. But now I'm going to get the dividends and the buybacks, so definitely great news for me, and good news for all Starbucks shareholders. And for the dividends earned in the portfolio, I've earned $773.96 in dividends since starting the portfolio. Annual dividends are up nearly $40, so $874.45 in this update versus the last time, $836.29 of about 2 weeks ago. Monthly, we earned $72.87 compared to $69.69 in the last update, so an extra, $3. So not bad for just a week, increasing our passive income forever by $3. And weekly, we're generating $16.82, so that's an increase of 70 cents or so. So pretty good there. Daily, we're making, instead of $2.29, we're making $2.40, so an extra 11 cents every single day just for waking up doing our thing. And how I'm tracking the dividend snowball is just how many months does it take me to generate $100, and that's been shrinking ever since I've been starting the portfolio. So it took about 6 months to earn our first $100. Now we've got that down to 1.37. Last time it was 1.43. So this is going to be shrinking and shrinking, and then I might increase that number to how many days it takes to earn $100. So that's definitely going to be a great way to track the progress on that. And then hourly wage, our portfolio did a great job in the market, and it's generating 42 cents every hour for a 40-hour work week. Instead of 40 cents. So a nice little 5% raise in the hourly wage, just with some deposits and reinvested dividends. So I'm just going to continue to dollar cost average and try to reach our goal of hitting $3 a day in dividends. So with the market going down, just let me know in the comments section what you're buying or what your plans are, and let me know what you think in the comments about Costco, and if you like Costco. All right, have a good day, everybody.